I went down this journey that you're going down now in 2012. And that journey led me to crypto. I saw it and I knew that this was the answer. And that's why I first bought Bitcoin in 2013, was exactly this, is once you see what has happened, we know the system now, regardless of how it ends, whether it ends in slow, ongoing death of economic vibrancy or a spectacular blow up, the answer is you need to transition to what I call the Bitcoin life raft or the parallel financial system. It's there, and you can participate with $1 or $1 billion.
Popular macro analyst and veteran investor Raoul believes the seeds for the ultimate economic collapse were planted during the global financial crisis of 2008. As central banks sought to boost the global economy in the aftermath of the crisis, they announced a barrage of quantitative easing measures to bail the economy. But experts believe their actions might have doomed us all. According to Raoul, the first rounds of QE permanently sealed the fate of the global economy and all fiat currencies. The QE rounds also made it inevitable that a second, third, and fourth round would follow, all with the same purpose as the first: to neutralize the bankruptcy of the system by the perpetual debasement of the currency. Unlike policymakers would have us believe, Raoul explains that they did not take care of the crisis. They glossed it over by printing trillions of dollars out of thin air. But not without consequences, as money doesn't just appear or disappear into thin air. In this case, Raoul believes these massive debts always find their way back to the government's balance sheet with interest, which most of the time is the only thing the government can service. So the debts continue to pile up, biting into such a huge share of the GDP that the only way forward is more debt, QE, and currency debasement. This is why Raoul believes that the Federal Reserve and other central banks will soon be forced to announce more key measures to again stave off the ultimate collapse. According to Raoul, quantitative easing is no longer a result of bad policies, but a means of survival and a last-ditch effort to stop everything from going up in flames. Raoul believes that all investors that understand these dynamics will know how and when to invest, and even the asset classes to invest in to outperform the Fed's balance sheet. The macro guru and Real Vision chief executive discusses all these and more during a recent highly insightful discussion with Bilyeu. Before we bring you some important clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our videos. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
What we are doing since 2008 is mutualizing the bankruptcy of the system via the debasement of currency. You can either raise taxes, which they're trying to do too, but they're also printing currency via the mechanism called quantitative easing, which is actually debasing the currency, which means that every time they do it, asset prices optically rise. They don't actually rise, because if you look at the central bank balance sheet and divide all assets by it, so you're changing the denominator, it's normally US dollars, but when you use the balance sheet, you say, okay, this is the purchasing power of dollars. Now, how many dollars are in the economy or excess printed? And what you find is something like the S&P 500 has gone nowhere. Real estate, gold, gone nowhere. And there's only two assets that have actually outperformed, which were crypto and technology. Okay, which is why we all feel like even though stocks are going up and our 401k is going up, nobody's getting any richer. Okay, we all know this intuitively, that we're not actually getting richer because the stocks I sell doesn't buy me more of a house. So what the fuck? What was the point of buying the stocks if the value of my assets aren't going up? But that is a mutualization, which is bad because it mutualizes it amongst people who don't have assets. So you'll never be able to buy an asset, which is why when you speak to a millennial now, they're like, we can't afford a house. Why? Because they came in to the labor force after the Fed started monetizing or lowering the value of the denominator. So property's got more and more expensive for them. It's impossible for them to buy property, really, unless they're really lucky in the workforce or in entrepreneurship or whatever it is. But generally speaking, it's become impossible. And everything has got more and more expensive, assets have, because of this optical illusion. But wages haven't gone up, remember, right? That's the key thing. Assets are going like this. We were doing this before because of demographics, and it was making people pissed. And now we're doing it from debasement, and there's no way around it. So what debasement does, on the other hand, remember, it makes the price of assets look like it's going up. This is why you can't have a banking crisis of the order of magnitude that existed before 2008. The reason being is you just print money the moment you see it, and voila, everything goes up. So the
For
value
a
of your
while.
collateral, so if you think about a debt, it's collateral plus the debt, and the collateral is what guarantees the debt. If you've got a banking crisis, your collateral is often falling so fast that, like commercial real estate, right? We're going to have a problem with that. So there's a bunch of debt, and the banks have got this commercial real estate as collateral, and it's all bloody empty, and everybody's going to try and get out of it. So the answer to that is print money and essentially magic that collateral higher, or put it on the central bank balance sheet. Europe has already done this. So I don't think you can have a systemic collapse because the value of the assets can never go down enough.
At the moment, Raoul believes central bankers and other policymakers have a handle on the situation. As long as they continue printing and coming to the aid of the markets, Raoul expects the economy to continue to operate as it is today. Ailing, surviving on massive debts and more debts and barely operational, but surviving all the same. However, even Raoul Pal is not ruling out the possibility of an ultimate collapse that would bring everything down in an instant. The only viable solution for investors, a macro guru adds, is to invest in crypto and technology, the only two investment instruments that have been able to outperform the government's balance sheet. On the other hand, other asset classes have only trailed the balance sheet for the past 15 years. Let's get back to the interview as Raoul discusses his predictions for crypto and technology as all scramble to come to the rescue of the global economy to avoid the ultimate collapse.
What I think my hypothesis is that, okay, this is very observable. I think it's going to last, this relationship between assets and the central bank balance sheet, because of the mechanism of debasement of currency. And I can forecast out what the business cycle looks like. And I also know the amount of interest payments that need to be made, because they happened 3.5 years ago. And I can see how far the balance sheet's going to expand. So the balance sheet right now is what, $6.5 trillion. And it looks like it will get $7 trillion or so. And it looks like it will get to $12 to $14 trillion by the end of 2025. So that puts, and there's a number of other ways I've proven this out in this whole thing. And I'll send you the whole piece myself. I've not really gone public with all of the whole thing of how it works. But in the end, that puts asset prices massively higher than here, hugely higher. So we're looking at more than a doubling of the NASDAQ from here. We're looking at another gigantic crypto run. That's into 2025. So we're seeing huge moves that just come from the debasement. And I've gone through in the Everything Code article that I wrote for Global Macro Investor, which is my kind of premium research service. In that, I've gone through various ways of proving this all out. So that's what I think I can do. But your observation, I think, is really important. Okay, when people, I mean, I've sent this to quite a few people, and obviously the subscribers of Global Macro Investor are kind of the world's most famous hedge fund managers, asset managers. And I think it really shocked people and resonated with people. They're like, oh my God, everything makes sense now. And so once you see it, it all makes sense. Now, as it becomes more public as a thesis, and Mike Howell at Cross-Border Capital has been talking some elements of this, liquidity, you can see liquidity becoming part of the conversation on financial Twitter and stuff now. What I think we'll probably do is create boom bust cycles. Again, you can't have the bust cycle going below the level of central bank liquidity because optically they make it rise. This is what people don't yet understand. But of course, the stock market should go down 90%. Can't happen. Literally can't happen because of the debasement. It's a money illusion. But what I think we'll do is see, hey, off we go to the races. That's what happened in 2018. 19, early 20, we actually diverged from the central bank balance sheet massively, because people starting to figure out this game, which is the moment the Fed stop the tightening cycle, markets take off, because they know that the probability of more cowbell, more central bank printing of money, more interest rate cuts is coming. And so therefore we get boom bust cycles. So the boom times are too big and then you get a bust. And people know that from crypto as well. The long-term trend remains intact, but we keep getting these huge booms, collapse, boom, collapse, but the trend is still up. I think that's what we'll see. We'll be more like the crypto cycle, which is pretty much what we've just seen as well. We had a big collapse last year, and now we're straight back into the boom as we're starting to forecast this. If you own crypto or technology, you will outperform this entire thing. Now, if you're not wealthy enough to buy, set up a brokerage account doing that because it's complicated for you, you can do it with crypto for no money, and you'll participate not only in the trend of debasement, so you're not getting left behind, because if you're just getting an income and you're not buying any assets, you're truly getting behind. So your 401k may look like the S&P 500. That's not making you any richer. Just buy technology or buy crypto, and those are the only two assets that outperform the central bank balance sheet.
Raoul believes the United States is heading toward a recession, which would prompt the Federal Reserve to increase its balance sheet to a massive $12 trillion by the end of 2025. How do you think that will impact digital asset prices in 2023 and beyond? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.